President Kaplan, it's Kelly here. If you'll indulge me in just a quick comment and a question.
Sure.
The comment is a lot of folks just aren't that worried you're actually going to hit 2% inflation, let alone 2.25, 2.5, or 3. So the market reaction is somewhat muted to that. My question, I should say the bond market reaction, my question is about the stock market and whether you're concerned that it is acting frothy.
Yeah, so let me make a comment first on your comment in that for the last 10 years, inflation's been muted. It's surprised a lot of people that we haven't had more inflation. I've been vocal that I think technology-enabled disruption is one of the reasons for that. Having said that, in this job, I think it's wise to go forward, not assuming the future is going to look like the past. You could have changes in the dollar. You could have other structural changes in the economy, globalization, regulation. And so I'm going forward being alert that inflation, it's not going to surprise us on the upside this year or next year, but as we get closer to full employment, we need to be open to that possibility. So I'll set that aside. On the markets, the only comment I'll make is obviously PEs are much higher. The Fed has taken substantial and extraordinary action, not just with low rates, but also buying treasuries, mortgage-backed securities, and these 13-3 programs, which have backstopped basically corporate bond markets and other markets. And I do believe that it's wise for us to emphasize these 13-3 programs will sunset. Right now, they have an expiration at 12/31. I think it's important that we articulate to the markets, don't rely on these programs being here indefinitely. They need to sunset, and markets need to operate without this degree of Fed intervention. And I am cognizant of what's happening with risk assets, and I think what we've done up to now has been appropriate, but I think showing some restraint from here and emphasizing the limits of monetary policy and the fact some of this will lapse is very important to emphasize today.
You know, President Kaplan, I want to follow up on just that. Great question from Kelly. What possible reason could there be for the Federal Reserve right now to be buying Apple corporate bonds and the bonds of some of these stocks that are doing so well? And at the same time, the Main Street lending program is struggling so much, $600 million only in loans, $600 billion capacity on that. Are you creating winners and losers in this economy? When you say restraint, is it time for the Fed to dial back on this corporate security program where the Fed is helping out these large companies so much now?
I think going back to March, to your point, we implemented a number of these programs because there was real dysfunction across financial markets, including the corporate bond market. And so just by announcing some of these programs, we caused many of these risk markets to rally and credit spreads to narrow and allowed companies to go out and issue. As a result of that, though, there were also some maybe unintended consequences that I think are part of doing what we did. So again, I think it's very critical to say we did what we needed to do because we needed to stabilize market function, but these programs are going to lapse and they're going to go away, and we are going to phase out of these markets. And I think that's critical. On Main Street, I think the dilemma on Main Street is this. It's a lending program, and many companies that could have borrowed from banks early in the pandemic already did. And those that still need to borrow from banks, many of them have weaker credits, and we still have credit constraints on the Main Street program. And we're a lender, not a spender. And so I think one of the criticisms of Main Street has been, why don't we take more risks? Why don't we ease up the terms, even though we'll take more losses? And I think our response and my response would be, it's really not a Fed decision that has to be made by Congress and the Treasury, but that's the reason Main Street has gotten less take-up. It's a good loan program, but you do have to meet certain credit standards. And right now, many of those who met those standards already got loans from their banks, and those that didn't borrow are probably lesser credits and would involve more credit risk. And that's the challenge on Main Street.
All right. Well, I
Robert
will thank you
Kaplan?
both, very much for joining us. Steve, really appreciate it. And Robert Kaplan, thank you so much for your time as well and for further articulating your thoughts on what the Fed announced.